Hello, welcome back. This is another final Inception video. So, um, this is taking into account everything. So, every single day that's passed since, I started, I think, yeah, September 23rd from 2024. Um, Soon we will be at the 1 year mark, soon we will be there, and that's going to be in the middle of Q1 for the second year. Um, so I might do a video on that. But at the moment, looking at it, um, we have had a really not even 1 year, and we already hit the 100% return mark. So it's very very impressive considering all everything that's happened. It's been up, down, sideways, down, up, circles, everything's going on. So yeah, let's see. So let me move the camera a bit to see. If we look at analyzing the first quarter was around 9%. We were outperforming that quarter SPY. We did end outperforming. So that year was that quarter was quite steady. It was mostly following SPY. Nothing out of the ordinary, which is what I planned it to do, and that's what I did this quarter. This quarter, as you can see over here, from basically around here to I'm gonna get the dates. So we started at the beginning of so June around here. So here to here, you know, it's mostly been straight over here, and you can see the big gain on the last couple of weeks. So that's good. Even over here, we were also already outperforming by a good margin. Um, so this quarter was what I wanted to be. Is this quarter would be similar, in terms of not going up and down by a lot to the last quarter, into the first quarter. So that's what I have achieved, and it has gone. I achieved what I wanted to do, and that's the plan for the following of the quarters. The rest of the quarters, that's my plan. You know, then this quarter was okay, good. Had outperforming, good, fine. Took a bit of a dip, then went back up, and then here's kind of also when I started going into some other sectors, which I wasn't yet too planned in. So I had experience in them, but they were more volatile, and in the end, the risk ratio reward was not great on them. So did take a bit of a dive here. However, at our lowest point, all things considered, at our lowest point, we were equal to SPY. So, if you would have just held, we were at our lowest point equal to SPY, which is a good thing to say. We weren't, insanely underperforming on SPY overall. Um, then we had a really good increase back up. We had here, the first increase was incredible. Here we were basically doing uh, I was the only problem here was that it wasn't doing a 60/40, right? I was doing 100% on the hedge. So that means that, the 2x stuff that I trade was actually, mostly going all in there. Um, then over here, a bit more volatility, kind of went down a bit, then back up. Here I was going back to normal, but it was okay. It was manageable. Then, move the camera. Then we had the tariff. So the first thing was the announcement. So I was short on that. Well, I was short before knowing the announcement, and then it happened, and then when I realized, it was basically too late because that thing was instantaneously. So that was a big drop. I think that was the biggest 1 day drop we've had. That without that 1 day drop, later on it wouldn't have been as bad, but that 1 day drop wasn't great. Um, the 1 day drop. Then I started some microstrategy shorts, which, to be honest, in hindsight, was not a great idea because the company is total. It's garbage company. The problem is it's basically just following Bitcoin, and I also thought Bitcoin would go down during that period. Stocks did, they didn't do. They did okay. Um, it started to push up though, and then Bitcoin wasn't doing much. And then I was like, all right, gotta abort this, and I kind of left that when I was equal to SPY on the overall period. So, our worst periods we were at the same as SPY almost. I think we were at one point underperforming by a little, but we were basically the same at our worst points. So that's something important to consider. Then we had an insane increase again. So here was kind of more stock. It was here it wasn't. It was different from the first recovery. It was different from this recovery right here to this one. Because on the first recovery, I was mostly doing, NVIDIA stuff, kind of just playing back into what I usually do. The second time, I recovered mostly on the Hims recovery. So the Hims stock was actually really good. It was very cheap, so kind of went in on that, and then just let it run. So I just let it run basically to the top. I sold it at the peak almost. I think, yeah, almost at the peak. Um, then it went down. Then it had some. Now it's not a great. It's not what it was. Let's just say, but that's why I haven't been going back into that stock, because it's not really what it's been, and it's just insanely volatile for what it is. So really, that's why I didn't really do that this quarter. This quarter, I wanted to be more, industry related. I didn't want to be going huge ups and downs. So That's what I did, and that's why I achieved this quarter. So as I'm happy about this quarter, and what I'm talking about is this part right here. So here to here, really good. So outperforming, I think around like 5 or 6 times we were outperforming points, and then we ended outperforming. Um, so that's what I want to continue. So this part, it put me to the test. The lowest points. Are you able to recover? And I was. It's basically around 3 points. I was able to recover really well. Here, then you also had I would probably consider here, and then in the beginning you don't see it as much, but also around in this area over here. At the moment, at that time, it was the highest standard deviations I'd had, so it was quite big at the time. In hindsight, it doesn't look that big, but it was quite big. But yeah. All right, let's go. So here you have the dollar. So the dollar amount, here's where the compounding actually happens. On the percentage gains, if you add each day on percentage wise and subtract and all that, you're looking around like 72, I think. But if you have the compounding, and it goes almost up to 100. So that's what I mean by, that's why I also keep a dollar chart, because it gives a good amount of the compounding. And I just have the y-axis here cut off because it shows the money that's in NASDAQ. So NASDAQ, here, if I move this, or actually let's keep it here. So, kind of what I meant, where it's following it quite well, basically up until February, had the drop, then went back up. Then you move this, did really well during the whole tariff thing. I was short. The problem was that, that one tweet, boom, got snapped there. And then the Bitcoin wasn't the greatest idea but as I said before, this is NASDAQ, so it's a bit better than SPY. But we are basically, almost equal to NASDAQ and SPY at our lowest points. So that's, a lot of people are, 5 or 10% down, at the lowest points overall. And, I wasn't. And right now, we're safely on top. Nothing crazy is going to happen, hopefully. But, the plan is 60-40, 60% SPY, 40%, the hedging stuff. I'm still doing specific stock stuff, but, my trades mostly come from, so for example, this quarter, on some trades I went to super microcomputer. That typically, if I wouldn't go into that, I would have gone to SOXO, which is semiconductors. So, in my case, I see, okay, there's a better way to get gains from super micro. And, that's what I did. So it was fine. I did gain more on doing super micro instead of SOXO. And what else? So yeah, that was pretty good. SPY or NASDAQ is just boom, straight line. Stocks only go up, right? So straight line, boom, look at that. So, us is also quite good straight line, as you can see, and a big jump here, so that's good. This is the last slide. Whoopsies. Okay, so overall NASDAQ. Let me see right now. Let me go close to the door right now, actually, because I don't know if it's causing audio issues. Hold up. Okay. So overall, NASDAQ, 54% of outperforming, so really good. Overall 54, that's quite good. Goal is 50. Last quarter did help. Right now we're at 97.6. We did pass 100% on Thursday. We were around 104%, so very good. NASDAQ is at 16.8, so that's quite strong, to be honest. S&P 500. So S&P 500, it's a similar straight line, not as strong as the NASDAQ, but still really good straight line, as always. 97.11, so 11.57. We're basically, if you look at this, 86% outperforming. So that's very strong. 54 almost. Good. Dow Jones is the worst one, 6.17%, so that's pretty bad. It's actually okay, but it's not great. 54%, similar. Here you have everything, as you can see. All the graphs. Nasdaq, SPY, Dow. Typical for that. These in bear times they do switch over. Dow might be on top. Nasdaq is typically the lowest because it's more volatile. But yeah. So here you have kind of like a time series of just every single day. You can see here the more volatility, and now we're back to similar levels of volatility from the beginning, which is the goal. So the second quarter and the third quarter are kind of times that are kind of ideas like forgotten times, old times. Now we're just gonna continue on this trend, so that's great. And also right now we are at 0.32%, so that's a lot higher than our 0.17% goal. So that's very good. All right, here we got the green, neutral, red. So almost 57% on green, 41% basically on red, and 3% on neutral. So pretty good. Neutral is 0% days. A lot of green days. Not 40% red days is okay, because we also do have 68% profitable trades. So that's quite strong. But because what I meant is that we do gain a lot more on our green days, right, than our red days. So we were getting around 0.4% more, which is quite strong. Yeah. Standard deviation is 3.25%, so that's quite high. SPY also has a higher, or actually does not. So right now it does have a lower gain than its losses are higher than its gains, so that's not great. But it does have a standard deviation of 1.31%. So if you think about it, 1.31% for SPY is quite big. This is mostly due to the whole tariff thing, but yeah. Over here, so the ratios we have are better, 1.24, 0.86, so proportionally we are doing better. So our wins to losses, we are, respectively doing it better. They could drop down to negative 2.47 from our negative 1.7. They could also drop down to 1.5 from 2.1. We don't want to be there, but it's just in a theoretical place. But our difference is quite high. Standard deviation is 2.5x, so it's more risky, but 100% or 11%, you pick your choice, right? So there you go, and the difference is 0.38. So mean transactions 1.4, so it's slightly decreased from the last quarter, which is around like 0.9. So it's slightly going down, but it's still quite active, right? So I'm still doing one buy or sell around the day. Day trade is only 0.5, 2.5 a week. So that's what I mean. It's quite active. There have been more active times than last quarter was only one a week. So there you go. Some quarters are more. This is mostly due to Q2 and Q3 were more volatile, so then there was more trades going on over there. But normally the goal is to be around one a week, maybe two max. Average hedge, so we are at around 1%, so that's good. Our goal is 0.5, and this means that in the 40% that I have after the 60% from SPY is those trades that I'm doing in there, how many of them, what's the average percent gain on that? So it's around 1%, so that's 0.4% overall in the portfolio, which is strong. And that means on the average trade I made 1%, which is good. Here we have everything I've invested in. So mostly everything, around 75% or more, is indice related, right? So we have indexes, right? You got QQQ, SPY, SOXL, SQQ. SOXs is a lot. You got TNA. What else? You got over TZA too, PSQ. And then you also have some other more stock specific related stuff. So SMCX, SMC, HIMS, Seth, which is Ethereum here, NVIDIA, and then here you have the natural gas. So, mostly it's stock related. Index related. There are some stock parts. That's mostly just when I decide to switch in there because I see a higher, risk reward when I go into that. But it's still made from the overall bull bear thesis that I have, right? So I'm just going into that because I believe I'll have higher gains for what I'm putting in, which is true. Sometimes it does happen, sometimes it doesn't, but most of the time it does happen. There's a lot of diversification, mostly in the tech sector. This I'm not gonna go back natural gas, obviously. What else? There's some crypto, not much. The crypto is kind of meh for me. Um, but yeah, I mean mostly semiconductor stuff, which is hot right now in AI. So that's what I'm mostly going into. Over here, so here you have like everything, all the different things I've traded and how they've done. Mostly we see green bars, which is good, right? QQQ, good. SPLG, these are typically just hold positions. I don't really do much. SOXO is quite strong, around 75% basically. SEQ 50, I like traded this in the beginning, so I don't really remember too much. SOXS, it's okay. Similar to SOXO, which is interesting. PSQ, I traded this in the beginning. It's pretty good though. Green, Amazon short, Apple short, good. Here's the natural gas is the worst one. It's not a full red bar, but it's not a full red bar because I did do a lot of trades in there, so this has more weight. TZA, good. RWM, good. IWM is just in the C really. NVDD, pretty good. This was during the whole tariff drama. Then you got UX, so that's really um, the the VIX, right? So then here you have the VIX, so that's fine. The Ethereum, MST, those things didn't really do too well for me. I did have some good gains in the second quarter from them, but like overall, it did more damage. So yeah, him's really good, strong. Then we also had the Reddit play. I actually did have I went long Reddit and then I went out of it at a loss, so that wasn't great. But right now it's doing really good, so that's interesting. Over here, SMCX, okay. SMC better though. ASMG, that's ASML. It's fine. TNA, IWM, basically. And then what else you have? And then TQQ. So TQQ was good too. So I mean, most of them are good. The worst ones by far were cold. What else? SMST did take quite a bit of damage on the portfolio. So these two are probably the worst ones. All the other ones have done well or neutral. So it's fine. So our beta, surprisingly, after having such a high return, surprisingly is negative 109. That's interesting, to be honest. Last quarter we were on 0.5, so it's pretty good. This low beta gives us the high alpha, which is what I mean right here. This is where we have the high alpha coming from because we have an inverse correlated portfolio that's generating 100% return while the market is going up. So that's why our alpha is so high. One, we have a full point, which is very impressive. If this is basically your return minus your risk-free rate, so that's 4%, and then you also have, if you have the minus the beta, right? You distribute the minus. The beta is -1, so it becomes positive there. So plus, and then you have the market return. Market return is around 11.57%, and yeah. So really, incredible, really good alpha, really good return. Sharp is really strong. You'll see later on. So not much to complain about. And her respectively ratios are also good. The average win and loss are great. All right, Sharp from Inception. So this is not the estimated analyzed Sharp. This is really the time that I've had. What has been the Sharp? In 2 months, we're going to be looking at the full year. So that from there you can, the Sharp from Inception will be a full year. At the moment, it's like 10 months. So it's 1.95, which is very strong. SPY is only at 0.4. So we're basically 5xing it, which is very strong. This is very good numbers. Over here, you have, right, so you got the Sharp estimated yearly. This is what I meant. So it's very close. 1.95, 208, slightly higher. 2.08 is quite good. You want to be above 2. SPY is only 0.44. So I mean, it's the same thing. I mean, it's not great. It's not, the thing is the whole tariff thing. SPY is typically around 0.7. So if you do have a couple more high quarters of SPY, which is most likely what's going to happen, this number could be going up to around 0.7. But we are still doing a lot better than it. Over here, Sortino estimated. So this is really only taking into account downside standard deviation. So that's going to help us. So we're at 2.6. That's very strong. This is a better way to look at our portfolio because, when we're going up a lot, That's good. It's not bad. Um, so it's 2.6 for SPY. It is slightly higher too. However, it's still only 0.55. So we're basically 5xing it, Um, right. I mean, that would be 2.65 times 5. So we're almost 5xing it. That's very impressive. With the high alpha, with the high return, with the negative inverse correlated beta, all these things, it's kind of weird in the end that they all work out, right? You have a negative 1 beta inverse correlated portfolio with very high returns in an 11% market, with high sharps and sortinos. So I mean, like, there's literally not anything more you can ask for. Over here, expectancy ratio, so just your average gain really times how many times you're profitable trade percentage. It's positive, almost 2, good. I think that's the last thing. Yep. So this is the overall portfolio return after transaction costs, negative 97.6. So very high. We passed the 100% mark on Thursday. Hoping, slightly went below it, but I mean, we're at that mark at the moment. So, I've been talking for a while, but I mean, it's incredible quarter. I mean, incredible, almost year. We have one more of these for the next quarter, but the next quarter is already when we pass the year. So this is the last Inception video before the year, runs out. So, or ends. The next quarter is going to be in the middle of that. It's going to be from like September or to the end of August to December. So around 3 months, try to get that in. What else? Yeah. I mean, hoping that this last quarter, replicates itself. We have good returns, all that, positive alpha. Since now, all of our quarters have been outperforming SPY, so that's really impressive with positive alpha, really impressive. Considering we just had the second best quarter, it's very good. What else? I mean, in terms of news and all that, it seems like it's not as conflicted as it was before, so that's good. Even though in that period of insane downside and insane upside, we are at 90 or basically 100% return. So it kind of just means that in both scenarios we're doing good. When it goes down a lot, oh, we're short then, and then I went back down to neutral, and then when it went back up, I also went back up. So this quarter has been very good. The report I'm going to publish is basically proving that only with TQQ I have a very good alpha and return and chart. So from those numbers right now, I can tell you that it's around 40%. The average return for me, and the standard deviation is around 12.6, no, around 13 almost. So you're looking at a sharp that's close to 3, very close to 3. So if you take it into account, right, let's say, for example, that the one standard deviation range goes up to 168. Actually, it's not plus 13, it's different. You'll see the whole report on that. But if we take into account, okay, 168 times 0.4 of that, so that's around what, 40. Let's do some quick numbers. Right now. So let's bring up this. Let's see over here. Let me blur that out. So basically, if it was around 168, right? So the number would be times 0.4. Then you gotta add SPY's return. So that'd be 11.57 times 0.6. If you look at this is a 74% return. So right now we're at 20% more than that. So it basically means that using stock-specific, related things and news, we have gotten 20% more of a return than the 1x standard deviation. If you only take into account the average, right, it's a lot better. We're looking at like 23 compared to 100. So in the end, using the news-related stuff and all that, and that in the end has done better for me than not only looking at price data. So that's important to note. We can go back to the slide, but that's about it. Thanks for watching. another great quarter. I'll let you all know when the next quarter starts. I'll still be uploading weekly videos. Um, they won't be a new quarter though. It's just like 2 more weeks because I'm still doing stuff, in between weeks. Um, it's just that a new quarter hasn't started. But when a new quarter starts, I'll let everyone know and contact me if you want to join. Thanks for watching. Thanks for the journey. It's been a while. We'll be 1 year soon. So I'll be going back to the US and, vacation's over and back to the grind. So, well, we were on the grind this quarter, to be honest, second best quarter, so nothing to complain about. Thanks for watching. I hope new people come in. All right, bye.